Okay, we'll open up and our subcommittee, and we'll start out with the first one, the Pool Risk Management Program 297. So Kristen, is there copies of the amendment? Are we? Yes, I did email it out to everybody,
I don't have the official amendment.
but you know, I don't know, make sure members have copies. I emailed him once, or actually not this, so we haven't seen, I haven't even seen this yet. Okay,
Yes.
so for the committee, and this is great to see everybody, a lot of people here. I woke up this morning and realizing that for most of us, the amendments we're going to be seeing today are going to be the first time anybody's seen them. and in terms of our schedule, we have to have everything out of committee a week from this Thursday. So what I did is, in case I don't know how far we get along today, I did schedule subcommittees again for tomorrow because I'm allowed to do 24-hour notice, so I did do that.
Yep.
We may or may not need to do that, but I just wanted to keep the possibility open. My goal had always been that we would have everything ready for next Tuesday, and that we would have our exec session on next Tuesday and then be done.
Yep.
But let's just
We'll see.
see how well we do here. Okay. All right. So starting out with the because you just gave me a pile of okay.
Oh, yeah, we're passing them down.
Session.
I'm passing it. Okay. Okay.
Excuse me, Chairman,
Yes.
is this much different than what you emailed us
Okay.
out last night? It
So
looks
what
like
I
the first two
emailed you last
categories.
night was the first what was done by the department, okay, in which then I email it to Legislative Services, and this is what Legislative Services sends back, okay. I would say that I did have a conversation briefly with the lawyer who drew him up, and he was kind of trying to understand what was happening in terms of the RSA 5 versus 402 and 420, and I explained to him. He said you were going to repeal and reenact, and I go, no, we're doing two different things. We're repealing Section 5, which is under the Secretary of State's office, and then we are enacting new legislation, which will now be known as 420R. And I see that by looking at the piece of paper. I'm even not sure the department had that. So I guess what we'll do is, given that this is an insurance term, so Alex, are you ready and aim to? Michelle, that's great.
Good morning, Michelle Heaton from the New Hampshire Insurance Department. I'm the Director of Life and Health. And before I let Alex go through the summary of what this does, we did note that when the proposal went to OLS, they added Section 1, and we don't like that Section 1, so we have an alternative. So we would say strike Section 1, which is on the amendment 402H11-B, and instead amend 402H1 by adding a new subparagraph N to the definition under I, so that it would exempt a pooled risk management program license pursuant to RSA 420R4 from being considered a TPA. And I think it'll achieve what they were trying to do
And
here
explain
in a
what
better way.
TPA means. Yeah.
TPA is a third-party administrator. We license them and regulate them, and those are entities that carriers or self-funded plans will hire to administer their plans. They process claims, do underwriting, all of that. So since these new organizations would have their own licensure requirement, we don't want them to have multiple licenses. So this would just exempt them from the definition of TPA and exempt them from 402H altogether.
Right.
So I have it written out here, and I can provide that to you.
Okay.
So
So
I'll
it still
turn it,
has the effect of what that H is
yes,
supposed to do.
but in a cleaner, more obvious way. I
Right.
think 11B kind of buries it in the statute and will cause a lot of confusion.
Right. Okay.
So I'll turn it over to Alex, who will run you through the summary of what this proposed amendment does.
Great.
Thank you, Michelle. We're passing around a two-pager, which is the document I'll be speaking from. It's a section-by-section summary of,
The
What-
executive summary.
it's the executive summary, yes, right. But I'm going to talk it through. So first of all, regulatory authority over pooled risk management programs is transferred from the Office of the Secretary of State to the Insurance Department. And then secondly, this provision, surprise provision that we didn't expect to come back from Legislative Services, addressing licensure as a TPA. Secondly, pooled risk management programs licensed under this new chapter will be exempt from licensure as TPAs, just as insurance companies are exempt from licensure as TPAs. Then the purpose clause of pooled risk management programs is preserved verbatim from the existing statute. Permissible coverages, that is, the coverages that these programs are allowed to write, is replicated verbatim from RSA 5B. A licensure requirement is added, whereas today in RSA 5B there is no licensure requirement. So these entities do have to file with the department. There are, articles and bylaws, and we have to review their financials and determine they meet the standards of the statute before they can get a license. And there's a grandfathering provision for the ones who are operating today. The clause in RSA 5B declaring that pooled risk management programs are not insurers is maintained in the new law. However, as with the Delta Dental Statute and the Fraternal Benefit Society Statute, the insurance commissioner is the regulator, and special provisions of Title 37 of the Insurance Code are made applicable. A number of Title 37 provisions relating to solvency regulation are made applicable, including approval of rates, risk-based capital minimum, capitalization requirements, examination authority, standards for allowable investments, the approval of dividends, inter-affiliate transactions, prior approval, authority for supervision and receivership. In combination, this is the insurance regulator's solvency regulation toolbox. So we're saying that if we were to be given responsibility for regulating pooled risk management programs, we would need our usual toolbox, and that's what's in that list. Importantly, the self-government provisions are strengthened over the provisions in RSA 5B to better ensure that the board of a pooled risk management program clearly represents the interests of members. This is more consistent with the self-governance model that local government risk pools across the country are based on. Self-governance in local government risk pools means that these pools are primarily managed and directed by a board of representatives from the member entities like cities, counties, and school districts themselves. Risk pool regulations vary by state, but in general, pools have a certain degree of autonomy in their operation and decision-making relative to insurance companies. So we're preserving some of that concept. And in order to make it work, we're ensuring that these entities are run by their members with a strong level of
Right.
representation.
And I
in
think
their
this is
board.
really important because you understand why we got to the place where we are today. So once it was created back in, in 80, 84, 85, whenever, when it was originally created, much like other states, where there was never any thought that there needed to be any regulatory authority, it needed to be anybody having oversight, needed to worry about solvency. And
Right.
frankly, no one, that said, well, it can't be insolvent. They would just be able to just go back to the taxpayers of those cities and towns and say, well, you got to pay up because we didn't charge the town enough. And why we're here is because we realize that there is a need for regulation, and there is a need for the solvency toolbox to be used, because we've already had 2 insolvencies and the threat of yet another one. So that, yes, we need to make sure that we do, like we do any other insurance entity, is making sure that we have regulation. And as most of my committee members know, is my rule of licensure, why we create licenses, and why this committee sees so many different entities, whether it's banking or in insurance, is that's how we regulate, is
Right.
through
The
licensure
license is a key.
is the process. So let's let him finish, and then you can. But
No,
I
I'm
can
trying to
cut
go
in when I
fast.
want to, but you can just.
I'll go faster. Okay. A provision is added requiring prior approval of rates by the insurance department. So we consider that to be a part of the solvency regulation process, because sometimes rates are inadequate. The financial reporting to the insurance department is required, including annual reporting of risk-based capital levels. Minimum capitalization standards are set using not a percent of premium, but the National Association of Insurance Commissioners' risk-based capital formulas, and as well incorporating the enforcement provisions that are built into the RBC model law. So RBC is a model law that applies across the country. All insurance departments use it for the regulation of solvency regulation of insurance companies. It's a sophisticated formula that takes into account different kinds of risk, not just insurance risk, but also business risk and investment risk and things like that, to come up with minimum capital requirements. And the minimum capital differs based on the line of business as well. So a provision is added allowing pooled risk management programs to establish a guarantee fund to protect themselves from financial impairment. Not the usual kind of guarantee fund. This is just like a personal to that company guarantee fund. It may be capitalized from surplus or through borrowing. Under certain conditions, the insurance commissioner is authorized to require the establishment of a guarantee fund by a pooled risk management program. A provision is added requiring pooled risk management programs to seek to maintain at least $5 million in excess or stop loss coverage, unless the insurance commissioner determines that a lesser amount is appropriate. We say seek to maintain because it's not always, the excess loss markets are not always available. So we put the standard in that language. Pooled risk management programs are allowed to issue assessable policies. I'm not sure if everyone knows what that means. It's a provision in a policy that says basically after the plan year is over, if it turns out we didn't have enough money to pay all the claims, we can come back to you and impose an assessment and ask for additional premium after the fact. We don't mandate assessable policies. They're not universal in the context of pooled risk management programs. But we do make it an option. So if the board, in its wisdom, decided that assessable policies are a good way of protecting against insolvency, then they could do that. Obviously, with local government entities, it's kind of a tricky thing. They have to form their budgets every year and can't necessarily plan on an unexpected assessment after the fact. So it's left up to them to decide whether to use that tool. There's a requirement added that whenever at the end of the year the program's capital exceeds 600% of risk-based capital of the what's known as the authorized control level, the board must take a vote on whether to declare a dividend or other form of return of premium. So again, we're not requiring a return of premium, but in this instance, if the RBC levels are high enough, they have to vote and make a decision whether to engage in return of premium or allocate the money to premium stabilization or to allocate it to a pool, a guarantee fund. Yeah, thanks. I have an article that I'd like to pass out at the end about the difficulty. It's published by Milliman, the actuarial firm, about the difficulty, especially for health insurance companies, of deciding how much surplus is adequate surplus. And it has a scenario at the end where a company is at the 900% RBC level, and within 3 years, it's declined to nearly the company action level with just 2 moderately adverse events. So the point in the article is it's very hard to say how much surplus is enough. And I should just also explain that when I talk about surplus, there were 2 different languages being used as between that language in RSA 5B, where it's just, you talk about reserves and contingent reserves. There's no such thing as contingent reserves in insurance regulation. They're your claims costs, your reserves for known claims, reserves for unknown claims, and then anything beyond that is surplus. And then the question is your surplus adequate? And surplus doesn't mean more than you need. It's just your assets that exist beyond your operating expenses and your known claims and unknown but existing claims. The insurance commissioner is given the authority and the duty to examine the financials of pooled risk management programs as provided by the insurance company examination law. So in that respect, they'll get examined at least every 5 years and when needed, just like an insurance company. The investments that a pooled risk management program may hold are limited to only the types of investments that insurance companies are allowed to hold under insurance law. There are standards. They have to be safe investments, basically, and they have to meet certain specific standards. A provision is added governing acquisition of control or mergers of pooled risk management programs. It requires insurance commissioner approval and requires that the transaction must be fair to members of both entities. We felt that there should be a merger provision put in here because one of the solutions that you always seek when one company is failing is to see whether you can find another one that can acquire that company, rather than let it just become completely insolvent and unable to pay claims. So we have a merger provision, which it's also in our Fraternal Benefit Society law. And this provision was borrowed from that example. Then there's a provision if one pooled risk management program has acquired another and is therefore a part of a pooled risk management holding company system, then all transactions between affiliates in such a system must be approved by the commissioner as being fair to all entities. We had some history that sort of relates to this, and this provides a standard where the commissioner would be reviewing the inter-affiliate transaction to ensure that it's fair to all members. In addition to the solvency enforcement provisions in this bill, a general enforcement authority is given to the insurance commissioner to ensure compliance with all the provisions of the statute. And the pooled risk management programs have the usual appeal rights that any insurance company would have, for example, under the Administrative Procedures Act. The insurance commissioner is given rulemaking authority as reasonable and necessary to administer and enforce the provisions of the chapter. The pooled risk management programs and their members are given the same powers and limitations on liability as in the current governing statute, RSA 5B. The same confidentiality provisions as are currently in RSA 5B7 are preserved. In addition, provisions added given confidential status to financial information filed with the insurance commissioner as a part of solvency regulation. And finally, there's a severability clause, which, like all other severability clause, declares that if one provision in the statute is found to be unenforceable, the rest of the provisions still stand. So, sorry, that
No,
was
good.
long.
It's there's a lot here, that's for sure.
Yeah.
Okay, now Representative Barrows.
I apologize if this was asked before. I was trying to get my computer going. Why keeping in the clause that says that the pooled risk management programs are not insurers? Why are we maintaining that in the law?
That's a tool that is done actually a fair amount in the insurance code. There are various entities that are declared to be exempt from the insurance code in general, but to have specific provisions apply, like fraternal benefit societies and like Delta Dental. And there are other examples. You don't literally have to say that it's not insurance. You can just say, like Delta Dental, if you look at their statute, it doesn't say it's not insurance. It just says Title 37 does not apply to Delta Dental except as follows. And then there's a whole bunch of provisions that do apply.
Just follow up. So is there a possibility then, if it's not spelled out, that we could go through this conflict or whatever we want to call it again, with where the oversight should be?
I don't,
No, it's clear that this would fall under the purview of the insurance commissioner. One of the reasons they're not classified as an insurer is because there's a lot of other laws regarding mandated benefits, healthcare, property casualty stuff, that those laws are not going to be applicable to these entities. They have the autonomy to figure out how they want to provide those benefits. And also, if they're an insurer, they would be subject to our administrative assessment. Since they're not an insurer, they would not be paying that assessment or premium tax.
Thank you.
Okay, Representative Spear.
One of the, excuse me, one of the problems I had with RSA 5B was that the risk was going to be held by the towns or the political entities, whatever you call those kind of things. And yet when we had the witnesses, or I guess the testimony that week, those who testified didn't seem to think that's the way it worked. They expected, for the most part, that that Health Trust or whoever the entity was, the pool was, would not be assessing them necessarily. They expected a known amount of money to be required, and it was planned, and they were able to work around that, and that's how they set their budgets. One of the things that happened with 5B is now all of a sudden it becomes very clear that there's a lot more going on with assessments than what it seemed like people were thinking. And in listening to what you just said, it sounds like we're still in the same boat, except that there's a lot more flexibility as to how those assessments and when those assessments are going to be put out, if they even are, because it could be another way, right? It could be just stabilizing premiums or whatever. Am I getting that right? Am I seeing that we're not going to be mandating the towns get assessed all over the place?
Right. We're not requiring that the policies be accessible. But you're also getting it right that there is this difference with pooled risk management programs as opposed to insurance companies. Insurance companies are always protected by guarantee funds. And by that, I mean the guarantee fund in the true sense of there's a life and health guarantee fund and there's a property casualty guarantee fund in New Hampshire, and they have boards and they have a very important authority to assess the whole industry in the event of an insolvency, so that policyholders' claims are always going to be paid. Even in an insolvency, claims go to the guarantee funds and get paid. With pooled risk management programs, there is no guarantee fund backup. And that's why you saw in this legislation that we're offering various substitute tools for ensuring adequacy of capital assets.
You're correct, though, that under the pooled risk model, the risk is with the localities, the towns, and whoever is part of that risk pool. With insurance, the insurance company has that risk, and they're liable for those claims. And if the claims are higher than what they collected in premium, they have to eat that. Whereas, you know, in pooled risk, it's up for the members to come up with that money. And that's why we put in things like trying to get excess and stop loss. That's another way, building up, you know, your surplus, making sure you have enough risk-based capital so that there is stability in that.
That's the thing.
But ultimately, the members of the pooled risk are keeping the risk. So they will ultimately be responsible for coming up with that money.
Follow on?
Further question?
So what I was reading in 420F, a whole lot of tools in order for it to be able to check at various places that the insurance department would be checking at various places, all kinds of events that make sure everybody's solvent and stable. So the towns need the stability, and it looks like you put a lot of effort into making sure we're going to have that. And that seems to be a very critical piece to this.
Right.
Would you say that's true?
Would you
I'm turning it into a question.
Thank you. That is true. We emphasize
Okay.
solvency over return of premium.
Yeah, I mean, solvency was why we created the insurance department in the first place, because we always wanted to make sure that the guy who was selling you insurance, that they weren't just low, and the premium was so low, and you say, oh, this is a great deal, and then it turns out that they couldn't give you your losses that you were expecting. So what is unusual when it comes to the risk pool is this other issue, which is the reserves or whatever you want to call it, the surplus versus reserves are too high, and that's really the history of always of risk pools was always based on that. There was never this expectation that there would ever be a solvency issue, and hence why we're doing this today. Okay, on this side, we'll start with Teresa.
Thank you, Mr. Chairman. So with all due respect to the great job that insurance department has done with respect to commercial insurers, would you agree that managing the commercial insurance, which are for-profit organizations, is not the same or will not be the same as managing these risk pools, which are not profit organizations? As you already outlined and you already know that these are mostly run by public entities. So would you agree that the management and the risk management as well as the oversight is going to be different between these two organizations?
As between insurance companies and
And the risk
pool
pools.
management, yeah, they're a different sort of entity. I think of them on analogy with fraternal benefit societies. which we also regulate, but they're unique entities and they have their own statute within the insurance code, and not all the insurance provisions apply because they have this governance structure that makes them different.
Do
Okay.
you have an example of the fraternal? I mean, how many do we have in New Hampshire? And
Well,
you know any of them?
I managed the liquidation of one of them. So I learned about fraternal benefit societies through that process. There was Association Canado-Américaine, which
Oh yeah,
a fraternal benefit society dedicated to promoting French culture and language in New Hampshire, and it offered small life insurance policies. And you can't be a fraternal benefit society unless you're governed by this lodge.
And you have an
system.
underlying entity that was already existing. I think that's
Yeah.
one of the requirements. It had
Yeah,
to be,
you have to have
you
this
couldn't be
association.
starting the association for the purpose of
Right.
getting it. Is my
Right.
memory.
Right. So it's somewhat similar to that. And I'm agreeing with you. They're different from a regular insurance company.
Yeah, follow up, please.
Okay, further question?
So, would you agree that adding this new responsibility to your portfolio is going to increase the expenses for running the Department of Insurance?
So I just want to make clear too that the department takes no position on this. We are just trying to help draft something should it come to the department. This is a way we would suggest doing it in a way that we think we can manage. If this were to move forward, we believe that we can absorb these new duties under our current budget, and we would not need any additional money.
Final follow up.
Final question.
So, if I went through the summary that we discussed so far, there are two main points, and we all know that we are here discussing all these things to prevent insolvency. So there are two things you basically emphasize upon: having the oversight so that the risk management can be done, and secondly, to have proper controls. So all your lines like number 8, where financial reporting to insurance department required; number 10, where you say establish a guarantee fund to protect from financial impairment; number 9, minimum capitalization standards are set; number 11, where you always say that added requiring pool risk management to maintain at least 5 million in excess. Then you also, number 14, insurance commissioner is given authority and the duty. Number 18, you again require general enforcement authority is given to the insurance commissioner to ensure compliance. And then number 19, the insurance commissioner is given rule-making authority as reasonable. So basically, the summary of all these points is basically the two things. One, you require proper authority to provide oversight to the risk pools. And secondly, you want to have in place bells and whistles, guardrails, thresholds, so that the insolvency can be prevented. My question is that to both you as well as Chairman Hunt, how are these two different, or this require different than the original bill that was proposed by Secretary of State, where they also were asking for more authority in order to provide oversight so that better transparency can be obtained, and to provide certain guardrails to maintain certain standards or thresholds so that they don't undergo insolvency the way it happened to one case.
I'm
How is
glad
this
you
requirement
asked
different?
this question.
I'm sorry?
I'm glad you asked this question.
Yes, please explain how is it
And
different.
I don't have to go far. Look
sorry?
at number 19.
I'm sorry?
Number 19.
Yeah, you're asking to provide reasonable and necessary authority as reasonable and necessary to administer and enforce the provision of this chapter.
Exactly. In other words, if we're going to deal with someone who's solvent or potentially solvent, we want to have the rulemaking process kick in to slowly make sure we understand what the issues are. How are we going to work out a solution? Here's the simple answer. under our current statute, is under the Secretary of State's office. Secretary of State's office does not do rulemaking.
I understand that part.
And this is very important.
Yeah.
Only way they can do it is take you to court.
No, but
So therefore, there is no workout. There is no process. There's either you go, either you hit whatever the statute says, or as we saw in the bill that was presented to us, okay, either you hit those numbers, or they take you to court. And what we're looking for is to avoid that process. We're saying is what makes the insurance department better at dealing in solvency
yeah, so
than
that is the-
statutory.
yes, that is the current
number
situation.
19. That's
Right.
the big one. there.
I got that part, but that is why things happen. That's the current situation. Isn't it in the SB 297 FN original bill version? They asked for the similar thing
No.
so that they can
They did not
can
ask for
provide
rulemaking.
oversight
There's
as well.
No rulemaking, no oversight. It is simply statutory. It's in the RSA. What they're coming in and saying is the only way we operate is the law. And therefore, we, the legislature, are enacting, we're making the rules, and we're saying the rule is black and white. And we're saying is we pick a number, and that's what that bill has. Pick a number, and it's hard and firm. And all they do is if they have evidence that you have failed that number we chose, they take you to court. They go to Superior Court, and that's what they're doing now. Okay, so that is I'm telling you, and maybe you don't get it, and maybe it's hard for you to imagine.
No, I don't
But
understand
the
that.
Secretary
In
of
fact,
State's office does not operate what you're seeing all this here is something the Secretary of State's office doesn't do.
yeah,
they
they
don't do
don't
any
do
of
it,
it.
and they realize that part. And based on that testimony we heard, a couple of weeks back when they talked about this, that this is why they are looking for more guardrails. They're looking for so that they are able to manage, and they are able to do better management for the
Right.
for what they are doing currently and in an existing way. They just wanted to have
Yes,
better
got
guardrails.
it. Right. They come in and say,
So
"Can
that's
you
what the
just give us
testimony
some
was.
more? Give us some more laws. Just give
No,
us some
there
more
are-
laws to pass."
No, they're asking
Okay.
for more transparency that they can
At
get
end
from
of
the
okay,
risk
you-
pools.
can be your opinion. That can be
That's
your
that's understanding I got when he was testifying.
No,
So I assume they're the same thing.
My opinion is no. My opinion is that running under statutory RSA laws, and you're complying with the law or you're not, is nothing to compare to an agency that is intimately shoehorning itself into that into this entity, and ensuring that on a day-to-day operational basis they do things that will solve the solvency issue. Okay, and that's the reason why I don't. When the first day when I read that bill, when I looked at it, I go, well, this is just saying, okay, that hasn't really changed anything that they were already doing. It's just making more law, okay, and that they've already had lost to. His total flexibility in white, and that's it.
So-
Exactly.
I think what both bills do is they're looking to have more oversight of these entities. And I think the way this amendment is drafted is that if this were to come to the insurance department, we would leverage this financial solvency system that's already in place, that's used across the country, to regulate insurers, and we would leverage what's already in there and apply it to these types of entities. Now, if that's the appropriate thing to do, that's the decision for lawmakers to make. But this is, if it were to come to insurance department, this is how we would recommend doing it.
So can I have follow up?
Can we
no,
move- can we move
now let's
on?
move on.
Okay.
You said you had your third.
Okay.
Three. Okay. Representative Miles is. and then
Thank you, Mr. Chairman. Thank you for taking my question. I actually just want to clarify, Michelle, right?
Yes.
I just want to clarify. Did you say that the Department of Insurance did not specifically request oversight of this, but instead you
I did.
have-
It was
we
me.
have
I
drafted
did
it
it.
at the request of the committee.
Of
Oh.
me.
Okay, so the Department of Insurance is not requesting taking oversight from the
No,
Secretary of State.
they have no
It's not your
desire.
idea. You didn't want it
The
necessarily.
former
It has-
commissioner made it clear that they should not come anywhere near this statute.
It has come to you. Okay, thank you. And then this is a separate question.
Okay.
I was just wondering if there's anyone in the audience who is going to be on the receiving end of this legislation who might like to speak. Is that?
That would be after we've done with
Okay.
him, but we would certainly open up the conversation to the
Thank you.
public. Okay. Representative Patel.
Thank you. I spoke to two executive directors of risk pools, so I would, if it's okay with you,
Yep.
they had several questions, and I just wanted to
Okay.
ask those at this point,
Sure.
if that's okay. One was from the healthcare side, one was from the property casualty side, and they both had similar concerns. So just to clarify, on number 4, with the licensure requirement, they would not be assessed as part of the licensing?
No, there would be a one-time fee, and I'm not sure if we put a renewal fee in.
$150, yeah.
There's a
There-
renewal. Okay,
yeah,
so it'd be a $150 initial registration fee and then a renewal fee, and that's it. They would not have to register. And by comparison, I think the initial licensure fee for insurance company is $1,500, so it's a significantly reduced price for these types of entities, and that's their only licensure requirement. They would not be subject to premium tax or the administrative assessment.
Okay, and that license process is something you would work on with them because they don't do that currently?
Yes, and there is a provision here to grandfather those who are already operating as risk pools, and then we would establish licensure requirements moving forward. That's what we typically do in our rulemaking.
And is it okay if I ask a couple
Keep going.
questions? Okay. Number 6, the self-governance provisions are strengthened. One big concern was that they would be weakened. So I know that you have an explanation, but can you just maybe point out one or two things why you think the self-governance provisions would be strengthened so that they understand that their authority is not being usurped?
Sure. Right now, I think only a majority of the board have to be actual members of political subdivisions. And the way it's rewritten is every member of the board has to be a member of the political subdivision, except for 3 public members. And then the public members are defined so they can't have any conflict of interest. So they can't be associated with the insurance industry or brokers or anything like that. So those 2 changes.
Okay. Another big issue was number 7, requiring prior approval of rates. That seemed to cause a lot of concern. Can you maybe help us understand what the approval of rates process would be and how it would impact these pools?
Yeah, they have to give us proposed rates before they're implemented with an actuarial memorandum that explains why the rates are not excessive, inadequate, or unfairly discriminatory. That's the standard that we apply to all rate approval processes.
But this process does not exist currently.
Correct.
So they're setting their own rates without any requirements or
Right.
authority. So that's,
In the testimony that was one of the complaints of the Secretary of State's was that
well, it also
the
got
rates,
several.
they were
int-
ignoring their actuarials.
And that's how we got into trouble. So,
Exactly.
Sometimes companies historically have decided they're going to quote buy business by having unrealistically low rates if they want to move into a market, and sometimes it results in insolvency. So that's like one of the things
so
we
there will
review
need
for.
to be a process worked out with them. I don't know if it's
Yep.
annual or how often they would adjust their rates.
Yeah,
Okay.
yeah.
And then the, another concern was the guarantee fund. That's optional. Is
Yeah.
that true? That's optional?
It's optional, yeah.
But you may
And-
have to enforce something if the pool experiences some issues, correct?
Correct. Just like with insurance companies, if they're in financial difficulty, we might ask for a quote deposit, which is just an amount of money that's held in trust. This concept of a guarantee fund is very similar to that.
And that's again, something new. There,
Actually, that was in the bill.
the
And House Bill
original-
297 had that mechanism to start, is to make the cities and towns start creating in their own
But they don't do-
safety fund.
But they don't do that currently.
No.
So
that's
it's
right.
another.
But that was another thing why
Yeah.
I did not like the bill as introduced.
But it's another safety feature.
Yeah, and it's optional except for, extreme
Right,
circumstances.
okay. And the question is about, I think it was the federal, the general question was their tax exempt status, and I'm assuming it's federal. Would any of this impact their tax exempt status?
Well, we wrote it to not impact their tax exempt status.
Okay. And then I think the big one, the final one is number 13. And I think that's what the memo you passed out. Number 13 is the 600% of the RBC authorized control level. So the question about how much surplus is enough. And so is the 600% going to be in statute or rules, or how would you adjust that if you would need to do that?
Yeah, the 600% would be in statute, but the only thing that triggers is a vote by the board as whether to make a return of premium or to leave things as is and use those funds for premium stabilization and things like that.
So would they must, and I know they must take a vote,
That's all.
but do they have to return
No,
they could vote to do nothing?
right.
Okay.
Yeah.
And then in general, they're concerned about the additional financial reporting and administrative work that this would require. Do you feel that this is a lot more administration that these risk pool entities would have to comply with? Do you feel it's onerous?
That's hard to say. It's once you get in the routine of doing it, it's not onerous, but you have to be used to it. And so there would be a period of adjustment. And the statute provides provision. There's a provision that says the commissioner will give guidance, written guidance as to how to file the financial statements and how to translate the risk-based capital reporting forms to apply to pooled risk management programs. So
your
initially,
office would be able
Yeah.
to review that with them. There was concerns that now they would have to hire, accountants and actuaries and a lot of staff to be able to comply with all the regulations.
And I think that's a valid concern. We don't know how these entities are operating now because we have no regulatory oversight with them. To do this properly, especially in an insurance context, yes, it usually does take financial people, it takes actuaries. And what we found in our experience in doing financial regulation of insurance companies is you need these things in place to ensure that you're successful and that you're solvent. So depending on what they're doing now, yeah, there could be additional administrative burdens.
Great. Okay. Thank you very much.
Yeah,
for
I
that.
guess I'll give a little story on that. I do the tax returns for 2 nonprofits, and you started out when I first started doing it. It was just a simple little form for the state of New Hampshire, and then they said, well, now we're going to say you need to do the 990. We have to do the federal 990, even whether you needed to or not. And then the 990, they came out with the 990 easy. So anybody who's familiar, the 990 was not easy. It was 10 pages long, and it was so overcoming that I then said, especially when both of these they had big funds. Yeah, I said, wait a second, now this is too much, and yeah, at that point I hired an accountant. We get an accountant. I would say that the one nice thing about New Hampshire is that if you had a question and you called the department, they would get back to you very quickly. And so they'll have plenty of hand holding and making sure those issues are handled well. Okay, Representative Herbert is next. He has not had a question yet.
So, having listened to all this, I'm going to ask you, and I'm getting the idea that you can handle these issues. You feel comfortable. I mean, they're going to have to do something different, obviously, in order to get back into a safe system, which it's apparently awkwardly gone off course. Are you telling me that you are confident that you can fix this problem?
Well, I'll tell you that first thing I did drafting up this language is to go over it with our Director of Financial Regulation and our Head of Financial Analysis to have them read it and say, okay, can you guys administer this? And they were comfortable that they could.
I don't think we can guarantee no one's going to go insolvent because that again comes down to, the entities themselves. But I think we're in a good position to take over this work because we already have a framework in place. If we had to build up this framework from nothing, it would be a much heavier lift. But the reason we're anticipating we can take on some of this work is because we're applying a tested framework that's already in use for insurance companies.
For over
has not-
100 years that you guys
Yeah,
have been
well, it's
existing.
evolved in that time. But I can't say that because we use risk-based capital and because we have all this oversight, insurance companies don't go over. There are still insolvencies, but they're more of a rarity, and we'll have a better idea of knowing when someone's headed in that direction, and we're in a position to help them make changes to avoid that solvency, but that's not always the case. Sometimes they still do go insolvent.
Okay. Anybody else for the first time? Seeing none. Okay, now we'll go for the second round. Representative Burrows.
This question is actually from Representative Ammon, who I met in the call and sadly wouldn't let me leave with him. But his question was, will the, let's see if I can phrase it the way he wanted, will the insurance department be comfortable asking the towns to increase the amount of the reserve and to deal with the political fallout from that from the communities?
That's a great question. Our old Director of Financial Exams was always like this about the idea of regulating 5B entities because of the potential political overtones to basic regulatory actions. So would we be comfortable if we had to do it? Probably not. But we would do it without fear or favor.
And that's
Work
why it's
hard.
good to have a framework that we're implementing the framework. We're not doing something arbitrary. So, that's what we would be sticking to. But
We're
yeah,
not
it's gonna get
we're not
uncomfortable.
reinventing the wheel here.
Yeah, but I imagine it can be uncomfortable. There may be some difficult discussions down the line.
All right, Representative Salvi has not had a question yet.
Thank you, Chair, for taking my question. So looks like we have lots of safety nets in the place. So the insurance premium will go up, right, through this process?
If they don't have enough money to cover claims, then yeah, premium will have to go up.
And who will pay that?
The member organizations. So,
Right.
towns.
Theoretically,
Taxpayers will pay that.
theoretically, health insurance costs go up every year. I don't know how many years you've ever seen a health insurance premium not go up.
Yeah, every year the cost goes up.
Exactly.
Basically, every year it costs more money for the general public
Correct. Taxes
through
go,
the tax as well as their individual things.
That's
So
correct.
this will be going to be additional cost to the general public.
Well, we're hoping We're hoping that when we implement this, that we're not going to see that stress, that we would tell them, no, you got to raise your rates. We're hoping that the only rate increases that we're going to see from now on are health costs related.
Okay, just a follow-up.
That's the goal. The goal is not to force them to, and that was one of the pieces that was offensive to me of the original bill.
Okay,
Because the original bill says they had to all create a kitty.
so do we have any kind of a projection related to what kind of increase will happen in next?
Health insurance, whatever. Do you know what health insurance costs in an increase this year?
At least with my provider, I get some estimate.
So yeah, we have the meeting in October, November. We come
Yes, the
back.
end of October every year we do the health cost drivers annual hearing.
Yep.
And I think we're talking about kind of different things here. Are we talking about just generally health costs? Because yes, those are on the rise.
No,
Utilization
I'm
is
not
on the
talking
rise.
about
Or are
that.
we
I'm talking about
these
because of
particular-
this. Yeah.
Yeah, and that's where we don't have any experience with these 5B entities, so we don't know what kind of position they're in now. So we're not able to say what this is going to mean for each one of those. But the hope is with a flexible framework here, we're able to work with them and get them to a place where they need to be in the least painful way. But not knowing their financial position or what they need to do to get there, we couldn't comment on what this means for the individual entity.
So one of the things you can do is you can go look on your computer, because you've got a computer and I don't, and look at the original bill introduced and look for the fiscal note.
Yeah.
See what it was going to increase, as estimated by the Secretary of State's office. Obviously, we don't have a fiscal note now from the insurance department because we're not there yet. But theoretically, there should have been a fiscal note.
Yeah, it says nothing.
There you go.
0%.
So our state,
And if you believe that,
so our expenditures would not go up, but it's likely that there needs to be changes for some of these entities, and anytime there's change, that's usually an increase in cost.
Most of
How
the
much
time
that
it's zero
is?
all the time.
Yeah, how much that
We-
is, we have no idea.
we used to have another. It would be an FN, then an A for, and then there was an L for local, and
Yeah.
it was supposed to be local. But I don't know. I haven't seen an L in a long time, so I think we got rid of that. So,
Thank you.
Representative Spear, this is your second question, second time around. Yep.
You said second round.
That's it. Now I got three people over here.
Okay, it's a quick question. I read all this stuff because I read car manuals. But I didn't see where it said if an assessment has to be put out, that you were responsible for putting it out as opposed to the
No,
risk pool has to do it.
yes, we would
Okay,
just
so it
be
doesn't make any
direct-
difference if you feel uncomfortable, you're not going to be doing it.
Yeah, I mean, I think there's a potential for political pressures. If we're saying you need to, have more surplus, so you're going to have to raise your rates, then there's going to be some political fallout. But we would not be doing that. We would be directing the risk pool that you need to do this and maybe helping them think through different options for how they can get there.
Okay, Representative Cerise.
So, as you all know that the Secretary of State has been managing risk pools for many, many years. So they are definitely very familiar with how risk pools work. And after listening to testimony of the Secretary of State last time, what he was mentioning that the reason of the insolvency was, one of the main reason was that there was no provision for them to get the financial reporting that you have asked in this, that you need. And that's why they also were looking for provision so they can get financial reporting on time, and that will create more transparency and they can avoid the insolvency that happened under their supervision. That is one thing. Secondly, line number 7, we already spoke about the rates. One of the reasons why risk pools are different than the commercial insurance is because their rates are usually lower since they don't have much overhead. And after you provide all these new regulations and new reporting requirements and requirement to approve the rates, etc., and you also acknowledged just now that could increase the rate. for the risk pool, how will that be viewed by the risk pool members? That is the question for everybody.
Well, I would just say that some of the advantages of forming a risk pool and retaining your risk is still there. You get the tax exemption, you get the ability to manage your own risk. You aren't paying profits to an outside entity. So all of those original purposes are still there.
Yeah, that's why they're able to maintain lower rates for the members. The question was that under this new set of provisions and new setup that you are, proposing, and you acknowledge that the rates could go up under this setup, how are you going to address it, or how are you going to basically manage it? That was the question.
Well, it's compared to the bill that was introduced.
The
that-
bill,
the bill as introduced, it would have been, if they hit a certain threshold, there would be no, maybe you should think about changing, not, approving the rates, or maybe you should raise the rates, maybe you should do some analysis. It was, no, you're done. We're taking you to Superior Court and we're shutting you down.
no, but
That's what happened. We've lost 2 of them because the Secretary of State just shut them down.
because they didn't have provision in place to ask for financial reports on time. That's what they said.
No.
The reason why it
No.
became insolvent was because they could not get the financial reports from the risk pools since they didn't have any authority at that time. And they're asking you under this bill, then
that is true.
that they
They're-
won't have
now
authority
they're
to
asking,
ask.
yes, that
Yeah,
is
so
true.
they were asking. And the same thing, even your proposed amendment is asking the same thing.
Yes,
So,
so
my question was the original question which I asked before: how is this different than what the Secretary of State proposed under this original bill?
I would grant you that under this one line item,
From that
how many
perspective,
line
from that
items we have here?
perspective.
22 items. Under that item, it's not, and that's not the only one, by the way. There are several things that are in here that were in that legislation. So the issue, are you saying you're throwing the baby out with the bathwater? No, we still have the bathwater. We're still using the same, we're going to still have a lot of the same goals and same expectations. And how's that going to be perceived by people? And how's that going to be perceived by the towns?
Yes.
They're going to say, thank God we passed this bill, because they're going to be so appreciative that now we have somebody whose expertise is dealing with insolvency, rather than running around naively saying, like it did back when the legislation was created back in '86 and all these years, that even in 210, when some of the new legislation was passed, it was always, no one ever thought insolvency could exist.
Yeah.
Nobody thought it.
And that's why they came up with the
And the
new bells
only
and whistles.
reason we're here is because we had insolvency. And now we're saying is going forward, we're not looking at the past. We're saying going forward, if insolvency is the issue, if now we're worried about insolvency, no, the Secretary of State's model of how do I say, enforcement through statutory requirements is awkward, messy, and
They were not asking.
and has not have the flexibility to ensure that the entity had a chance to revive itself, restore its financials, and stay in business.
And-
That's why we want to pass this amendment.
And that's the reason why they had asked, Secretary of State was requesting to have more provisions for them,
Right.
not statutory requirement, but more provisions for
They did.
them
That
to
is
get
true.
the financial report on time.
I
That's
will
all
not
they needed.
argue with you that that's why they put the bill in.
Yeah, and they were
But that
actually requesting you to help
saying
them.
is what they put in is lame. It is draconian in its way it's enforced. It is very limited, and it does not have foresight.
Okay, one
to
last
better
comment.
manage
Mr.
Okay.
Chair,
that change.
One last comment.
Mr.
Okay,
Chair.
no, you're all done. You're all
Okay.
done.
can
Okay,
we
got it.
move on?
Yeah. Yes.
We're going in circles. Thank
Okay.
you.
Okay. Representative Miles.
Thank you. Perhaps this is more of a would you believe?
Okay.
So changing course in the middle of a quasi crisis, I usually is not a good idea. I just want to point out that the Secretary of State seems to want to keep this in their purview. The Department of Insurance Commissioner and the Department of Insurance has not asked to take this on, and the commissioner himself is absent today. So I don't see the desire for them to want to take this over. And so in light of those two things, I think perhaps we should go back to the Secretary of State's original bill with their provisions in place to continue, but to continue with the guardrails they're putting in place to ensure, including increasing the padding to prevent another insolvency. Would you believe?
Fair enough. That is your. Okay. Everybody all set? Thank you very much. Now, anybody in the audience would like to weigh in? Come on up. Ladies first. Go ahead and
Good
introduce
morning.
yourself, please.
Good morning, Chairman Hunt and esteemed members of the committee. My name is Lisa Duquette. I'm the Executive Director for School Care. School Care has been in existence for 30 years, and we operate a health pool with just about 100 public entities that represent about 25,000 covered lives in New Hampshire and $250 million of taxpayer-funded coverage. So by no means is School Care small or insignificant. This amendment, as proposed, is something I just saw this morning. So I have some initial comments that I'd like to make. One is regarding concerns about loss of local control. We heard the question asked earlier by Representative Porcelli, and we heard some responses to that. Number one, rate setting is absolutely a loss of control. If we have to go to the Department of Insurance, that means the political subdivisions don't get to review that. Obviously, today what happens is we have actuaries, we have accountants, and we have 2 public hearings at least 10 days before the Board of Directors sets rates. There is a very rigorous process in place by which the members receive our financials, receive the rate information, and then give feedback to the Board of Directors. In addition to that, we heard that this would strengthen our governance. There was an assumption made that risk pools, such as ours with health, don't have representation from the members equally with labor and management, when indeed, from the beginning that School Care was formed, we've had 5 representatives of management, 5 members of labor. What this bill does is throws that out, allows us to keep some management and labor, but also adds in 3 external. That's contrary to our existing governance structure. There definitely are additional administrative costs, and those costs are going to be passed directly down to the taxpayers. No doubt about it. How much they are, we heard the Department of Insurance has no idea. I certainly have no idea whatsoever. We also heard things like risk pools are not insurance. Yet what's interesting is we heard things like contingent reserve aren't in here. We go to our National Association of Governmental Risk Pools, for which I sit on 2 different member committees, as well as teach at least 1 to 2 public risk management programs on running a health pool. I'll add, ours is not in financial disarray. And yet, when we look at the language in this bill, it's filled with insurance language. RBC, numerous times through here do we see insurance language, and yet it says we're not an insurance company. I then ask the question, we're an IRS Section 115 government entity. It isn't going to be up to the state or us to decide whether we still can keep our tax-free status for the benefit of the New Hampshire public taxpayers. It may call that into question. And last, I just want to add one additional comment. I'm sure there's lots more that I could comment on within here. There's a number of things that assume that we operate on a calendar year. We don't. We operate on a fiscal year. Some of the reporting in here would be absolutely impossible for us to do. I'd need to spend a fair amount of time reading through this and thinking through all of these pieces. But my last piece that I want to just end with is the risk for operating a pool, a health pool, property liability pool, a public entity pool, lies with the taxpayers. And they're fully taxpayer funded. And the member entities that we serve should be in a position to continue to run their programs the way they determine appropriate. And I have to also share with you that comments have been made that it's not all or nothing, that the Secretary of State takes you to court. We've been through 2 examinations. We have not always seen eye to eye. We have worked very carefully together. There are times we've dug our heels in and they've dug their heels in, and we've come to resolution, and we have never found ourselves in court. It is possible. And so I just thank you for your time this morning and your careful consideration of this. I would urge you that School Care supports Senate Bill 297 with Senator Carson's proposed amendment that was presented to the committee, I believe, but not accepted by the committee. Thank you.
So I have one question for you.
Absolutely.
What happens if we made it an option? You can choose who your regulator is. Think about it. Think about, because you're going back to the original argument why originally it was never regulated by the insurance department. And if you guys really think that you're better off being under the Secretary of State's office and being ruled by statute, even though you say that that I'm wrong about being taken to court, but I have no problem. I'm pro-choice myself.
Okay.
So I think that if us passing this statute, this would be a choice that an entity could choose. Who you choose your regulator.
And what would the conditions be? Would you keep 5B in place?
You would keep 5B in place, and you can not have to do that at all. And that any organization, if their members choose to go under this other statute, then that would give them another path.
I like that as a possible option, Representative.
Wouldn't we be duplicating personnel?
No.
Why
you
not?
actually, well, I mean, the extent the Secretary of State's right now is hiring outside actuarials. They're getting their funding through securities. The insurance department pretty much is doing everything within the department. We really weren't taking, there was not going to be anybody coming over from the Secretary of State's office to come over here. At least, not that I didn't think so. maybe Mr. Lang would, but as far as I know, they were separate, and that.
Yeah, but they're hiring actuarials, which is money.
No, we have the actuarials already.
Where? In Secretary of State's?
No, we have our own. We have
Okay,
our-
that's what
Yeah,
okay,
okay.
but if you give them a choice, the Secretary of State
That-
has to pay for an actuarial.
No. The Secretary of State's office will, I assume, continue
They already
with
have
their system
actuaries.
now. Right, they already have their system.
They already
So-
have actuaries at this moment.
Yeah, they have their outside.
Secretary Scanlon did say they use some outside sources.
Exactly, from the guys from DC. Yeah. So yeah, but he's, and I asked him how he's funding that, and he says he's funding it out of securities division. Which how he's pulled that trick off, I don't know. But so Representative Spear.
Hi, there were 2 things you said. You said a lot of things very fast, but I caught 2 things. And one is something that I think you said last time when we had our session and the hearing, that you don't take every town or entity that wants to be in the pool. You do a risk analysis before you take them, and if they don't pass your risk analysis, you don't take them as part of your pool. Other pools take everybody who's ever walking around.
Guaranteed issue.
So the risk is very different.
Guaranteed issue versus,
Yes.
yeah,
So the
under
risk is
Affordable
different.
Care Act, what they're doing is was made illegal.
So I'm
Excuse
asking
me,
if
I don't believe that refusing to quote is illegal. We're not running them
I'm
through.
not saying anything illegal.
No, what under when we had the Affordable Care Act, House Bill 711, or excuse me, Senate Bill 11 that we did in New Hampshire, it was guaranteed issue versus medical underwriting. And what you're doing is you're medically underwriting the group to decide whether you want to let them into your network.
No, that actually isn't the case. So what the situation was, and I'll take a community in the North Country without naming it. That community had claims that were 200% of their contributions. I had a conversation with the town manager and explained that if school care provided rates, it would be a 60%. We had it underwritten. It'd be a 60% higher than their existing rates. I said, rather than insult you with rates like that, what I'd like to do is spend some time talking about what's going on potentially with your claims experience and what strategies you might work on. So school care is not medically underwriting these groups. We are not doing anything like that. We spend a lot of time, when I look at our mission is around education. And so when we say we can't provide a quote, we mean we can't provide a quote that is anywhere close to the quote that you already have, and we explain it to those groups.
Okay, I understand. So the other comment was that this one you said here was that the insurance department sets the premiums. And that is, I read everything, and no, it does not. Well, it may say that in the summary, but it doesn't set the premiums. They do review the premiums, and they review them for a couple of specific things, which I think the insurance department mentioned, but they don't set the rate.
They have the commissioner can refuse the approval of the rates if he or she finds the rates are excessive, inadequate, or unfairly discriminatory. So they do get the opportunity
They get an opportunity, but they don't set them. You know, that's a blanket statement, and it sounds like they're actually doing something to set the rates, and they don't. The pool does, and they get to review it. So those are my only two comments
So-
that I caught.
Well, that begs the question. When you sit down with your rates with the Secretary of State's office, those three questions, do they pose one? When you said you were some things you disagreed on, could have been one of those three things that you just read?
the Secretary of State, we don't sit down with them with the rates. The way RSA 5B is written is that we need to have an actuary provide a recommendation to the Board of Directors. That happens. The board takes that under advisement, then goes and has 2 public hearings with the member entities invited to those public hearings and solicits feedback from the members. And then 10 days later, there is a board meeting where rates get set. The Secretary of State is not involved in the rate setting process whatsoever. And this also, again, goes to my question about preserving local control.
Okay, but let's read that sentence again. Read the sentence again. Can you mind, please?
The commissioner may refuse such approval if he or she finds the rates are excessive, inadequate, or unfairly discriminatory.
Okay, unfairly discriminatory, inadequate. So you're saying that there is no approval by the Secretary of State's office with that they would say to you that your rates fail one of those tests?
With all due respect, Chairman, this is language in the amendment that you just presented.
Correct.
It does not exist in RSA 5B.
I'm saying is, but so 5B, there is no
It's a different
system.
process.
And we heard from the Secretary of State's office, one of the issues was is that the Board of Health Trust ignored what their actuarials told them. And that they did set the rates too low. So you're saying is that all the power to them, that having that's local control, or not local control, in this case, it's entity control, that they were making the right decision for them and that the Secretary of State's office was wrong to criticize them for that.
I haven't said any of that. Please don't put words in my mouth.
Well, then think about what you just said. Does it not say that you're criticizing them for making the statement?
No.
Okay, fair enough.
The, and you can tell me if you agree or disagree with this statement. It appears to me that this very point is what the real point of all of this, it's what the real point of this discussion is about. And while and it's an old story in the insurance business, with some background in insurance. Every insurance rate is approved by the insurance department in every state in this country. The companies propose their rates, the insurance departments approve them based on those three criterion. Your entity may be solvent and well run. You may take the advice of your actuaries, but as I believe you correctly point out, you don't have to. And so we have had other instances where somebody said, man, I don't want to. And that's the problem. And so in my view, and correct, I'm not seeing why you would even object to this, is to have those three criterion apply to school care. Because your rates clearly are not discriminatory, are adequate, and are reasonable. In the history of insurance, sometimes that happens, sometimes that doesn't happen. And the reason the insurance department even exists really is to make sure that we have adequately funded, properly managed insurance entities. So we're not just dealing with Ponzi schemes.
That's a would you believe?
If he disagrees, I'd like to know where.
I think what it's taking out of the process, and I don't disagree with those pieces, but I would also tell you that what it's taking out of the process is the transparency to the communities that are being served. Where do they get a chance to see their public hearing? Where do they get a chance to have their input? All of that's missing from here. So we're rushing through this process in a very quick manner that we are losing some of the things that we have today in RSA 5B through this process. And this is just one piece of my concern, right? So there's
Got it.
numerous other pieces that I haven't been able to fully absorb and articulate at this point.
Okay, we all set? And Representative Miles, you have another question?
Actually, were you proposing an amendment that they can choose their regulator?
I was thinking that, and that's just the way I've always been, is knowing full well that there were some entities that were perfectly happy with the 5B process. And that, well, if they want to continue to do that, I think they're delusional. And I think that when they see how well the other one, this new 420R works, I think they'll easily want to switch over. But that if they want to continue with the 5B process, I guess then they'll just have to explain it to their constituents.
Mr. Chair, is there any other entity where they get to choose who regulates them? I mean, does anyone else
Yes,
do this on the planet?
Unfortunately, it is absolutely true when it comes to banking. You choose your regulator, and let's face it. Right now, when it comes to ERISAs, the whole point is ERISAs have chosen not to be regulated by the state, but they're chosen to be regulated by the feds. So yeah, there are, in this mix, there are definitely choice options. So
A
go.
quick follow-up about local control. So, Lisa, thank you very much for coming in. I'm not sure why the public hearing, the process that you outlined, why that would cease. Why wouldn't you continue to do that process and let the public know where you were in the approval process and how you came up with the rate and do what you're currently doing, with just the one added step that there's an extra oversight? Can you help me understand that local control? I think it's not understanding the timeline. We have very short timelines today in terms of doing that. So it would have to be examined, and I think that would be voluntary in nature.
But I also think that I also believe firmly that that should not be voluntary in nature, that that should be a requirement.
I think you're right. I think that and the insurance department will take that in a note that if we did pass this legislation, that in their rules, they would require the entity to have a public hearing and have the community. But I would think most of the people in the community are just going to want lower rates. But I don't know what else they would be asking for in this public hearing. But
But they want to understand why the rates are increasing, right? So we have medical trend, but then there's sometimes other things, like when you're having to rebuild your reserves or you're
Right.
considering other facets. And it's
so you were all
really
set to do
important.
that because if we had passed the bill as it introduced, you would have had to set up these local funds. So you were all set, ready to have public hearings on that.
With
and
Senator Carson's amendment, that is not a requirement. It is an option for the pool to maintain an extra 4%.
Okay.
And just one quick question. Would there be flexibility with the insurance department on some of the dates and deadlines? So you're not on a calendar year, you're on a fiscal year. Is that something that the insurance department would work with you on?
We'd have to work through that. I do think it would be time. And I think Representative Porcelli, you and I spoke about this, and I explained at that time too that we're not opposed to being regulated by the Department of Insurance. It's that there's a lot in here to unpack, and there are certain things that, if put into law, would not properly apply to the program. And there's other things that we should be talking about and considering. I do believe Senate Bill 297 with Senator Carson's amendment gets us over that initial hump of ensuring solvency for the programs and putting in those guardrails. And then we need to take a future attempt at considering how we could do that within the Department of Insurance.
Great. Thank you very much.
Thank you.
Anybody else would like to speak? Yeah. Cool.
Thank you very much for the opportunity to speak. Scott DeRoche, the Executive Director of Health Trust.
And Jean Herrick, I'm General Counsel at Health Trust.
So just to give a brief overview of our organization, we currently cover 356 member groups in the state of New Hampshire, approximately 72,000 covered individuals with approximately $500 million in annual contributions paid. We are strongly in support of the proposed amendment. While the amendment requires much more reporting and approvals than risk pools are currently required to provide under 5B, the amendment's requirements are clear and consistent, are based upon actuarial standards, and will promote financial stability and accountability. To be clear, this is more rigorous oversight than the current law and SB 297 provides. Nonetheless, we would welcome effective regulation. Risk pools fulfill an essential function for New Hampshire's public sector. Member groups, covered individuals, and taxpayers deserve financially sound systems. Earlier it was asked what this does as an amendment compared to 297 or 5B. Some key highlights include the minimum and maximum reserve levels that are appropriate are based upon the RBC model and will ensure solvent risk pools. This model is actuarially sound, proven, and used throughout the nation and extremely effective. That is in contrast to the reserve levels contained in 297 that are arbitrary and low. It requires rate approval, eliminating the opportunity of charging less than the actuarially recommended rate, which has been something that has been raised a number of times. That is not in 297. It has a full set of oversight, including examinations, supervision, and receivership that is much more rigorous than what is in 5B or 297. It adapts to evolving market conditions through regulatory rulemaking authority, which is not in effect with our current regulator and is not contained in 297. It has guidance on additional backstops, including effectively a self-guarantee fund and excess insurance, which is not in 297. There's licensure requirements to be able to operate a pooled risk management program, which is not in 297. And importantly for our organization, We offer non-assessable policies. So that means that the premiums are fixed in a given year for a group, which is critical for municipal budget processes. There's no assessment, which is a key provision of 297. This amendment allows for non-assessable policies to exist. As offering non-assessable policies, we would need a higher reserve level than somebody who offered assessable policies. And that is a key point as to why we have stated, and our board has stated, that we would not be able to continue to offer coverage if 297 passes as written in the original Senate version. The reserve levels are too low for us to continue the coverage model that we offer. This model allows for our model to exist. By carrying forward the purpose and permissible coverages of RSA 5B, the amendment remains true to the legislature's intention in 1987, and the regulatory structure allows multiple types of risk pools to exist to meet the varying needs of New Hampshire's public sector. For example, this amendment allows both accessible and non-accessible policies to be offered, allowing political subdivisions to choose the amount of risk transferred to the to the pooled risk program. In sum, we view the amendment as ensuring viable and valuable risk pool environment for the benefit of New Hampshire's political subdivisions, and we appreciate the thoughtful approach. Overall, the concerns that have been raised over recent months has been regarding solvency. This puts a rigorous system in place to ensure solvency. Risk pools are important. As an example, our organization has $500 million each year of taxpayer money. We should be proving out where that money is going and that rates are adequate, and we should be clear with our member groups. We would continue to hold public hearings and things along those lines. These are very valuable systems. We operate within a free market today. Groups, towns, cities, school districts can choose to contract with commercial entities, but the vast majority are with one of the risk pools that offer these coverages. This allows those models to exist and allows them to be stable. And to refer back to my previous testimony, the main issue with 297 from our estimation is the reserve level is too low. We understand that we are in a low financial position today. We are part of in a rebuilding period right now. We had a multi-year rebuild that was established by our board of directors. We had a $10 million gain last year. We have an additional year-to-date $10 million gain. The purpose is to rebuild back to a level where we would never fall into solvency concerns if an instance like COVID occurs again. And in order to do that, we need to have a higher level than the 16% that is put into place in 297. The 600% RBC is a sufficient level to allow this to exist, in addition to the concept of additional backstops, especially if you are facing adverse market conditions.
Thank you. Do we have any questions from the committee members? Yes, Representative Herbert.
Thanks for the information. What is your opinion in terms of who's going to be the political entity, either the Secretary of State or the Insurance Department?
As far as regulation,
Yep.
the primary focus for our organization is on the system that's in place. That is the key provision. In 297, it's a 12 to 16% locked into stone maximum reserve level with assessments that'll trigger if you fall below. It's a very narrow range, and there's going to be either returns or assessments. It's going to be a very volatile system. What's put forward in this amendment is a true system that, again, is used nationwide, the risk-based capital system that will allow all different types of risk pools to exist, including ours, which is a non-assessable risk pool. So when I'm speaking in favor of this amendment, I'm speaking primarily because the systems are sound and true and based on solid actuarial and proven evidence throughout the nature. That's my primary focus and support, agnostic to the regulator.
Representative Miles.
Thank you, Mr. Chairman. Health Trust, don't you have a lot of reasons why you would love to get out from the Secretary of State's purview? And secondly, why did you lose your tax exempt status in 2016?
I'm not sure the first question's referring to. I'll turn over to Jean on the tax exempt question.
We did not lose our tax exempt status. We simply explained why it should not be revoked because it was being interpreted in error. With respect to tax exempt status and the prior testimony, having recently reviewed Section 115 approval letter, I feel very confident that this statute will allow us to continue that tax exempt status.
Are you sure that's your testimony?
Well, she just did it, so I guess she's sure of it.
I'm just giving her the opportunity to.
Say
wa-
something different?
Mhm.
There was no need to, there was the tax exempt status issue in section, or in 2016. I can review for you again, but I can let you know that there was no gap. It was a misunderstanding between the secretary or the IRS and Health Trust with respect to the requirement for filing tax returns. Tax returns are not required to be filed under Section 115. There are activities that one can conduct that are not exempt from Section 115, even if you're a Section 115 entity. But if you are not conducting any of those activities, you don't have to file a tax return. I will send to you all of the documents that we have in our files so that you can understand what happened in 2016. Happy to do that. And so that you can see what happened.
Thank you.
Okay, Representative Teresa.
So, thank you, Mr. Chairman. So in your testimony, you mentioned multiple times that for SB 297, the reserve level is pretty low. Would you be able to tell what kind of reserve level do you maintain or wish to maintain?
Certainly. So the reserve level that's in 297, as written, is 12 to 16% of upcoming contributions with a potential approval with the Secretary of State's approval to go up to 18% of contributions. This is the risk-based capital model, which is in use across the nation in the amendment. So the amendment targets a 600%. To give you an idea, to try to put the two models together, our board has targeted a reserve level of $122.5 million to have as that reserve. That equates to about 24% of
24%?
Yeah, it equates to about 24% of upcoming contributions. To give you a translation to the RBC model, it would be approximately 579% of the control level. So it would be pretty close to what they set as a target of 600, where the board should start having conversations about a return. Let me get you the exact number. 549% of the 600. So it's two different models. So where we target is 24% of upcoming contributions if you're thinking the 297 model. If you're thinking the proposed amendment, it would be a 549% RBC of the 600% RBC. And so that's what our board is targeting to, again, not have the situation occur that came out after COVID, because the market is changing. It's an incredibly volatile market. And during the COVID period, we gave back $57 million in return of surplus. And now we're in a position as of April financials year to date where we want to raise at a minimum $50 million to get to the lower end of the actuarial range that our actuaries prepare.
So follow up quick.
Well,
No, so you feel so you have statistics that are reasons to believe that the 24% that your firm is targeting will be required to prevent the insolvency rather than 12 to 16% as proposed in the original bill.
That's exactly correct. So we have a non-assessable policy today. So we can't go back out for additional monies today. And so we need to have sufficient reserves to be able to get through the upcoming rating cycle, which in the public sector is quite a lengthy period of time, because we issue rates in October for the following July 1st for July groups. that lasts to the following June before new rates can go into effect. So we have to have sufficient reserves to get through that period of time, especially in an upcoming and changing, market environment. And so we hire Milliman, the actuaries, to do a capital adequacy reserve analysis. We look at the level that would require us to have a 95% confidence interval of being solvent over a 5-year period of time. And so that develops a range depending on pricing flexibility that this year was between 95 and 150 million. The board chose the target of 122.5 right in the middle.
Thank you.
Okay. Oh, Representative Spear, yes.
So a non-assessable pool says you're not going to ask for assessments. That's right. I mean, is that right?
Not go back on the
You
same.
can't go back. So my
same
question
year.
is this. 5B says that the risk is owned by the towns, but in your model, the risk is owned by you guys or you folks. And so so you've been operating this way for years. And why hasn't the Secretary of State Department said you're not following 5B? How is that working out within the context of 5B?
Well, he can't express motives, maybe motives, but
Yeah, I do think it's an excellent question in terms of 5B is a very broad statute as written back in 1987. It's a very broad statute, and it allows for, in our estimation, different models of risk pools to exist. We understand that now a narrower view is being taken as what's allowed to exist. Our model has been for 40 years now, because we were established prior to 5B. Our model has been for us as an entity, the risk pool, to be self-insured at that level, meaning we hold the risk. Our coverage relationships with our member groups are akin to fully insured relationships, meaning that they have a set premium for the policy period, depending on the number of contracts they have, single, 2-person, family. And that's all that they are responsible for. They pay those premiums, and that's it. That's where their liability ends. The only thing we can do as an organization is, on a prospective basis for an upcoming rating period, we could add, as an example, a surcharge to help rebuild reserves. But it's critical that we have appropriate reserves to protect those entities. Again, very beneficial for the towns and schools, because then they have a fixed expense for that budget year. They're not worried about an unexpected assessment or an unexpected claims fee, et cetera, et cetera. We did have historically a very small number of member groups that were in a self-insured relationship, meaning that on a monthly basis, we billed them for their actual claims costs. SAU 60 was the last one we had of those. That ended on June 30th of 2020. They moved into a fully insured, what we call a fully insured model. And so Senate Bill 297 as written, one of the reasons we are so concerned is it explicitly does not allow our model to exist. And I understand that there's a narrative that we were never allowed to exist. We have for 40 years. We've done annual filings. We have operated this model for that entire period of time. And so this clearly contemplates that accessible or non-accessible plans would be allowed to exist, and you would be able to have the appropriate level of reserves to run either, with, again, the rigorous oversight to making sure that they're run well.
okay. With that, I will end the subcommittee meeting on Senate Bill 297, and we'll meet again tomorrow morning at 10 o'clock and see. No, just done that one. Okay, we have 2 more. So what I'm thinking is, right now, we do have the amendment for Senate Bill 164, so hopefully we can get through that quickly, and then we'll take up the liquor one after lunch. So, Chris, yes, can you take a brief break? This one is technically business, yes. And then tomorrow we will talk. Which has triple damages. And we do have the language in there to unwind if one of these unfortunately did get recorded. And obviously, we're not expecting the the registry to actually read anything. We know what they do. They take something and they file it and call it a day. And so we at least now we have the way to unwind. And I guess what else there's to be said? I don't know. Did anybody have any questions?
You put in everything that we wanted.
Yeah. No, I think this is another one of those bills that I when I first read it, I said this baby is dead on arrival, but I really
You changed.
goes to show that I'm not totally that I'm more apt to try to find. No, we're over here. This is
So
just-
do you need a motion?
Okay,
This is
so
under-
this is a business. Okay, so we have Ammon, Pressa, Petusik, Hunt, McAleer, Herbert, Spear, and Salvi. Okay.
2222H.
Okay, Herbert's back in the room. Good. And so we're missing Keith, and that's it. And McAleer. Okay, so they're good. They cross
Or
each
even-
other out. Perfect. We don't have to worry about it. Okay, so who wants to write the blurb on this one? Representative Spear,
Sure, I'll make the motion. I motion ODP.
seconded by Representative Petusek, moves ought to pass on the
Oh, at
amendment.
first, on the
To
amendment,
pass
right?
on the amendment number 2222.
Who was the second?
Petusek.
Two. Number second.
Okay. Any discussion on the amendment? Seeing none, all those in favor, please say aye. Aye. So, yeah, so that would be 6 zip.
Or 6.
Okay, Representative Spear, second by Representative Petusek, moves to ought to pass as amended. Any discussion on the motion? Seeing none, all those in favor, raise your hand. 1, 2, 3, 6 zip. Okay, then we're all set. All right, so we will do the liquor one after lunch.
Okay.
The problem is the amendment's not done yet. So,
So we got tomorrow morning, right? And
so
tomorrow
let's be
afternoon.
back by 1:15.
We got tomorrow morning and afternoon?
I think at this point, it's
We're
just
gonna
tomorrow
split
morning.
those bills?
Tomorrow morning, we'll see. Yeah, everything's tomorrow morning.
Okay.
Okay,
The liquor sec-
liquor will be quicker. Okay, so, as, I'm looking at the wrong bill.
87,
Okay.
amended, as amended.
All right, so as we had discussed before, that we wanted to say in this bill that you can only get one drink. And we want to lay out what one drink means. And this will be a first that, or the first time in my career that I've ever in 1 year have invented 2 new licenses with new fees. And I was thinking it probably supposed to be 120. Because remember the old system, the computer could only do things by multiples of 12. And that's how I came up with the 4,800. But the 100's fine, but you know.
I can see this one being 100,
It's fine.
but the insurance one, you had also at 100. Was there a reason why you?
Oh, that was the insurance department picking. No, the tavern bill was 4,800.
Oh.
And the fact that that bill is still alive for the Senate. So there were 2 on my. They did table it. Oh. It's so sad. It was tabled in committee or tabled on the floor, on the Senate floor? On the Senate floor last Thursday, then. They yanked it. Who yanked it off the table? I'll have to watch the tape. But I'm surprised it had as much life in it.
Which bill was
The tavern bill.
Oh, the one where you can have.
The one that liquor license, no food. No. So, this is back to the bill, what they're already doing, which is we already have barbershops doing this. And as I said before, a certain person nudged me and said, by the way, you haven't solved the bridal shops. Okay, I'll fix it. So what we have in here under this bill, you start with paragraph 4, the Roman numeral 3. This is what the original bill, the commission may issue a license currently licensed to the Office of Professional License and Certification as a saloon or barbershop and to serve one alcohol beverage to consumers who receive from said services. Now you turn over the page, is it? Where is it? Okay, it's down at the bottom. Okay, Roman numeral 4. The commission may, no shall, may issue a limited special license to any business registered with the Secretary of State as approved by the commission. That means the commission is going to see that you're properly registered with the Secretary of State. And we know what a bang-up job the Secretary of State is.
But this means that risk pools can also.
It's right. And the commission approval. Right.
Yeah,
And the
correct.
commission shall be subject to a specific location. And this was the interesting part because I know when I left it in Daniel on Friday, they were still a little squeezy about this whole issue. Because before we were just giving a broad license to anybody who had a barber's license or beautician license. So down here we're saying is that to a specific location, and that was important to me. You can't be on a truck, okay? And the business plan. So you gotta make some kind of statement, and that'll be done by rules, which we know how important rules are. But even better, shall not be broadly applied. Which means that just because that shop, that you got it, we're not going to say that we unilaterally, all bridal shops get it, because you might have somebody who the bridal is, the 3 dresses in the back corner, and the rest of the stuff is and the rest of the shops is, what was the one the news last night? We were talking about these massage place parlors. It was a national problem. That they're all popping up like everywhere. And Representative Lawton this guy said, these things are out of control. We got to do something about them. So,
A funeral home could get the limited specialty license if they wanted it. Yeah. In theory, any business could apply.
yeah,
But you don't have to have a license if it's in your home.
you can't get it.
You
If you run your operation at home, you can't do it.
We talked outside before. You do know this, a lot of places are not gonna go with this. They're not gonna follow it. You do know that. But it Yeah. I call it the Aunt Rhoda factor. I had an Aunt Rhoda.
Aunt Rhoda.
And she was a very powerful woman. She was gorgeous, had long red hair, and she was very wealthy. And she always got what she wanted. And let me tell you, she goes into a salon where she's spending big bucks, she's gonna get as many drinks as she wants.
That's right.
Well, this is where, as of today, all of these activities are illegal.
Okay.
So now you're saying we have this limited category where it is legal.
Yep.
And you have something to take away if there's somebody who's egregiously, you have a basis for policing.
The John Hunt law of license.
But, well, and it clearly applies in this case. It's a very good rule. So, you could be a real estate office and say, we're gonna have 100 closings on Wednesday, and we wanna have a drink.
So you'd have to get the license.
You would apply and get the license.
And you'd have to
That would,
Yeah, but he has to pay the license one time a year. It's $100
Will
license.
you have to put down every person?
No. What did we end up doing with
We
that?
did. You had that. They would such records shall retained by the licensed facility and shall be made available at next request. The licensee shall keep records of the patron served.
Right, just records of who that was served. Yeah.
what happens now, which is in some real estate offices, there may be a bottle of alcohol behind the broker's desk, and that's why God invented Dixie cups.
But does that count as one drink?
Well, I don't know.
Okay, that Dixie cup can only be used for the bourbon, by the way, because if you look on here, that the bourbon is 1.5 ounce.
There's little Dixie cups.
Yeah, they do. I've seen the little ones. So, but yeah, this way, this is so we at least we get them to register, get them a license, get them post a license, and yes, we fully know that somebody might be served more than one drink. We know that can
My
happen.
aunt has passed away.
And I'm sure she didn't have any liver disease. Yeah, Representative Waltz. You would yank their license away.
It would start with a verbal counseling. So penalties are outlined in administrative rule that's dictated by another statute. In administrative rule, though, outside of egregious offenses and over service of alcohol or service to a minor, we follow by administrative rule progressive discipline procedure. So the goal here is to get everybody in compliance. So if we were to get a report, we would still do a complete investigation to determine did it happen. If it happened, we would start with a verbal counseling, say, hey, here's the statute, here's the rule, here's what you have to follow. If we received an additional complaint, it would be a warning. And then from there, it would progress to fines and points.
Small business owners, salon owners and whatnot, this is actually your way to save
Mine's got the
your
full
product.
I see. Well, let's see why you gave this one to me.
And because now you've worked with the
Quality
So
control.
actually, and the one hand, it may sound like you're becoming more restrictive. You're actually giving these people a place to go and say, you know what?
It's like your gavel.
Oh, I'm sure I met you.
Okay, everybody all good with this? All right. Representative Burrows, you want to carry forward with this one?
Chairman, just to be clear too, this is the amendment to the bill. There's three, there's
Right.
other
no, I
license types in the
understand.
bill. Okay.
And it does say, oh, shit.
So this is just the
No, no,
amendment
I'm
to the
looking at the wrong
paragraph
one
of the
again.
bill.
293H.
Okay. Amend the bill replacing section 1. No, that's the wrong bill. I keep looking at the wrong one. What did I do with it?
Maybe this one? Here,
Okay.
you got it?
All right. All right. Amend the bill replacing after section 2. So that means 1 and 2 are still there.
Correct.
Okay. All right. So Representative Burrows, seconded by Representative Petusek, moves to pass on the amendment number 2293. Any discussion on the amendment? All those in favor say aye.
Aye. 1, 2, 3, 4, 5, 6.
Okay, 6-0. And now we have Representative Burrows, seconded by Representative Petusek, moves ought to pass as amended. Oh, you wanted to do it? Okay. Okay. All right. Oh, you're ready. You're ready to vote. Okay. Any discussion on the motion? Seeing none, all those in favor say aye.
Aye.
Those opposed, so move
6-0.
6-0. All right, we're
We
down
did
to,
it.
we're down to 2 bills.
Amen. Yeah, the 2 bills from hell. The 2 bills.
Okay, so the agenda tomorrow is the 2, yeah, we're gonna be, no liquor tomorrow. We're just gonna be doing,
Pooled risk and ambulance.
What is
Okay.
that gonna be? Kind of a show?
So my hope is with the pooling risk that we'll just have a, it basically gives anybody last chance to say what, you know. Yeah. Watch the film. Give everybody a chance to say what, you know, what they really care and how they feel about it. And then we'll discuss the ambulance bill.
How do you think that's gonna go? She's okay, she knows this by now.
Oh, bloody hell. What? Did you punch her again?
I just don't very likely.
You're gonna break you girls up over there.
Long day?
Okay.
think?
So,
Tomorrow?
yeah, tomorrow should be, you know, the morning, because
Oh,
I'm,
just
I'm
morning?
expecting there's not
Okay.
much. I mean, I think everybody can read the tea leaves on the risk pool, and the ambulance is, I mean, the ambulance, we have, in terms of the options, we have the